What is going on with interest rates, everybody? We are with Chad Johnson, our premier lender with Edina Realty, and we are going to get the intel from him directly today. Welcome back to Fly the Coop. Let's hear it, Chad.
Interest rates are kind of like going to a theme park right now, Cari Ann. You stand in line and wait and wait and wait, and then you go up, and then you go down, and then you go up, and then you go down. It's really a global economy right now. Definitely a roller coaster. We're in a global economy right now. There's stuff going on all over the world. We're battling inflation in the US. The Federal Reserve is trying to curb that. They met this week and decided not to raise rates this time, but hinted that they might later in the year yet. So after that announcement this week, we actually saw an improvement of about 1/4 to 3/8, depending on loan programs. So, it's definitely a roller coaster.
So you and I have both been in this business for 25 years and counting.
Yep.
And we've seen about every kind of market imaginable. If you were to run the averages, and we remind everyone, our clients especially, this, in fact, what is your position? What is your speak when people hone right into the interest rates, the differential on what their spend is per year, and then most importantly, living life and identifying what that looks like and getting them set up in their future home?
Yeah. So 2 great questions. And right now, if you're looking at a home and you were looking 2 years ago, you're not going to see anywhere close to the same interest rates, unfortunately. We're back at more of a 40-year average interest rate right now than historic lows like we've seen the last couple of years. The key, and I tell this to everyone, is find the house that you absolutely love. Let's do the math so you can see where you sit for your payment and what your interest rate's going to be. And hopefully at some point the market improves and you can refinance and improve your financial position in that house. But being at a average market rate right now, it's really important to find the house that you love first, and then worry about what the rates are going to do or where they're at or where they're going to go.
Because at the end of the day, everybody needs a place to live.
Yep.
And rates are the rates. We always say, don't marry the rates. I know some people don't like that tagline, but it is the truth. It is a roller coaster ride.
Yep.
And you're going to spend an amount of money every month in your lifestyle. So no better place, in our opinion, to put that investment of money and build personal wealth than in your home, because they're only going up, right? Let's talk about that a little bit. The cost of housing is going up for sure. And the cost to build the housing and the land values in this country and in this state and our city are going up. So there is a bigger umbrella conversation there, don't you think?
I do. And when you look at the first time buyer in a position where rates are right now, if you think about it, if you're paying rent, you're paying 100% interest. You're getting no return on that.
Correct.
And next year your rent's going to go up again. So, don't be afraid of where we're at. We're seeing prices still increase, and the estimates are still a 3 to 4% appreciation every year, even in this market. So, I think getting in now still makes sense, even though the rates are higher. The prices are going to be higher next year. So now you're at an offset. Is now the time, or do you want to wait and pay more next year?
I would say to everybody, and when they ask me, where you and I are busier right now than we were in March. There's a lot of life happening right now.
It's definitely busy right now. And you would think with everything you're hearing on the news or you're reading online that there's nothing going on in real estate. That is not the case at all. So
no,
don't believe everything you read.
Exactly. And I think it's important that we have these conversations on a regular basis so people really hear what's going on, feet on the ground. I say we're running in the trenches, dealing with the reality of every single day. There's relocation happening internationally right now. We've definitely put ourselves on the map as a mecca, an option for the relocation within the United States, especially East and West Coast bound. We're very valuable on paper. If you were to look at cost to live and cost for housing in Minnesota in comparison to the East and West Coast, what's your take on that, Chad?
Affordability is much higher in our market than it is on the East and West Coast. I mean, we hear stories all the time of somebody buying that 1 bedroom, 1 bathroom house in San Francisco for 1.2 million.
Mm-hmm.
Well, that in our market can get you a 5 bedroom, 4 bathroom, 5,000 square foot house.
Mm-hmm.
So, I mean,
Exactly.
it's definitely more affordable here than it is on the coast.
So when we talk about all life transition, so whether it's our first time home buyer or our right sizing, we have several right sizing going on right now where they've been in their home for 20, 30 plus years and they're transitioning into a new space now. I would say 95% of them are completely unaffected by what this rate lock is. Obviously, we're talking about it, but it's not slowing their role in making a life decision.
It's really not. In fact, the amount of equity that people have right now, we're seeing a lot of those downsizers with the ability to pay cash for their new house. And,
Mhm.
for me being a mortgage person, cash is, I hate to hear that word because then they don't need a mortgage.
Right.
But the reality is, people have been in their house for 25, 30 years. A lot of them have enough equity or they can just pay cash for their new house and they don't even realize it or they don't think there's a way to do it. We
Mhm.
see where we can do a bridge loan for somebody, or we see where we can do a short-term financing for someone to make that transition. So it's more than what's happening right now with that new house. It might be a 6 month, 12 month, 18 month plan that we come up
Right.
with for someone to downsize. So
Correct. So
there's
let's
lots of options there.
let's talk about bridge loans because a lot of
Yep.
and we're dealing with this conversation every day and it's shocking how many people don't really know what that means. I always say the bridge from your current life to your next life and how do we tap into that money to make that happen non-contingent.
Yep. So a bridge loan is really easy to describe it. It's in essence, it's a big home equity line of credit on your current property.
Mm-hmm.
You can borrow up to 80% of the value in most cases. There's a few that'll go a little bit beyond that, but you can borrow 80% of the value total on your property. So if you have a small mortgage left, we have to calculate that into that 80%. But
Right.
then it's an interest only payment on that money until your house sells, and then it just gets paid off and you don't have a mortgage on the new property. And
Right.
that can be used to, pay cash for the new property. That can be used to come up with a big down payment for the new property.
Mhm.
There's even scenarios where people will do a minimum down to come up with the cash to cover for the down payment on the new house, but still use a bridge loan to access those funds. So
Mhm.
great product, lots of use for it.
Yeah.
In a lot of scenarios, Cari Ann, we're getting people set up for that bridge loan and having it all the way through underwriting ready to go. And
Mm-hmm.
then we're not closing on that loan until they find a house and have it under contract. Because in the meantime, you're probably going to sell their house anyway, so they're not going to need the bridge loan. But
Right.
we'll have it ready and we'll have it sitting there if they do need it. So
And if you do a bridge, we just talked about this the other day, how fast can you put a bridge together for a client?
yeah, it can get from the time we do the application till the time we have the approval. Most of the stuff I'm seeing is somewhere in that 10 to 12 business days that
Amazing.
it's ready to go, right?
10
Now,
to 12
again,
days to don't, basically dip into a big reservoir of funds that a lot of people don't know that's even an
yeah,
ability. That's
yeah.
amazing.
And again, it just sits there until you have a house under contract.
Mhm.
So if it's ready to go and you end up not needing it, great. We had plan B in action for you, but definitely
Mhm.
something to consider if you're in a great equity position and you're looking to move.
Okay, so flipping to the very beginning of life, what are the options right now for the kiddos out there, our young people that are starting out, that just finished school, they've started their career? We're dealing with a couple of these right now where their debt to
Yep,
income ratio isn't due to car payment and school loans. Uh,
yep,
Give the audience some hypotheticals on how, they've got parents who, whether we like it or not, is probably our wealthiest group of humans we're going to see in the
yeah.
foreseeable future that can tap into A, gift money, or B, some type of reservoir asset to help their kids. What are some options there for them?
Yeah, so there's a lot of options out there right now for first-time
Mhm.
buyers. Three of the most common scenarios I see is we work with some sort of down payment assistance program. There's stuff out there where the first-time buyers can get into their new home with as little as $1,000 out of pocket,
That's
right?
incredible.
I mean,
Mhm.
there's huge amounts of down payment assistance money out there right now. So that's option number one. Option number two, parents can gift some or all of the down payment on the new property. So if you're going to look at a $400,000 house and your mom and dad can gift you $100,000, I mean, that's the dream scenario, right, for all of us. But, you know, we can use all of that money to cover everything you need to get into the new property.
That's incredible.
Option three that we're starting to see now, especially since the student loan forgiveness on payments is over, we're starting to see where mom and dad are co-signing, where they're actually going on the loan with the kids. It works just fine. And again, you can still do minimum down on that. And then we work with you to get to the spot where we say, hey, once your car is paid off in 16 months or whatever the scenario is, we can look at doing a refinance and taking mom and dad off. So again, it's not necessarily a right now thing that we're focused on, but we want to find a way to get you in that house, and then we'll work with you on that long-term plan as well.
That's phenomenal. And I think a lot of people don't know we're going to spell that all out. So they've got some options that they can understand and then give you a call. And then the other faction of transaction work we're seeing is an uptick with our families and our relationships locally and nationally on an investment front. Like we've heard about this conglomerate, like these large companies coming in and buying up a lot of real estate. Separately, on a more intimate mom and pop level, there are interests in buying a duplex that's owner occupied for their graduate, investing in some multifamily. What is that looking like right now in the finance world?
Yeah, so you're right. Investment properties are starting to make a bigger comeback in the market right now. If the parents are buying it for the child, if the kid's listed on the loan as the primary borrower on that, they can do as little as 5% down on a multifamily property now. That just changed within the last month.
Okay, that I didn't not even know, because I was talking to you about that. That's amazing. 5% down. You understand, everybody, it used to be a 25% down flat, like there was no options there. So it's amazing.
Yeah, it's a great product. You know, you used to be able to do FHA with a 3.5% down on a duplex. You can go 5% down conventional now. So that's a big winner. So the other thing we see is, you know, parents are buying a duplex for their daughter that's going to school at the U, and she's living in one half and they're going to rent out the other half. I mean, we see all kinds of stuff like that, and there's lots of solutions out there for that. So don't discount that as an option if that scenario fits for you.
Completely agree with you. As I'm looking at Carter right now, my 19 or 20 now, 20, he just turned 20 years old. We're talking about getting him into an investment property. So some good little tips out there, because 50% of our city is young. They're millennial younger. So there's a lot of opportunity, and a lot of them are renting. And I don't believe, and you tell me what your thought is, but I don't really think the rents have been forgiving in all of this. They keep going up.
I think rents are going up faster than interest rates. And, I don't know the exact percentage, but, you know, it seems like everyone I talk to that's renting every year, they're seeing whether it's a 5%, 10%, 15% increase in their rent. And you don't really know how to budget for that, right? I mean, you're going to sign your lease this year for $1,800 a month, but you don't know what it's going to be next year. I mean, if it's 18 now and it jumps to 2,300, is that in your budget where that can work for you? So,
and more importantly, if that's your rent, there's some housing out there that's very much available, and there is some correction happening. I think both you and I are seeing it. And when we're coaching our sellers, we're reminding them they just came off of some extraordinary appreciation over a 5-year window. So do not look at it like a crash, quote unquote, or a major market correction, quote unquote. It's all in the mindset, how you look at that. The market saw a huge 50%. I mean, a massive appreciation, running at 8-10% a year for a 5-year window. And now what we're seeing is, a market correction, but they're still making money. There's still value in their sale. It's still worthwhile selling, and it's helping the buyer populace.
Well, and I think it's important for people to know the difference between a correction and a crash, right? The correction is coming from when houses went on the market and there was 75 showings scheduled in the first hour, it was active and it sold in, 25 multiple offers on the
Right.
first day,
Which is a
right?
reality.
It was yeah, and the price was running up in that multiple offer scenario.
Mhm.
Okay. The crash that we're all thinking about that
Mhm.
happened because there was an oversupply of inventory at that time. I mean, there was
Just
more
not what
houses
we've
than there
got.
was buyers. That's not the problem right now.
No, it's not. No, it's not. That's such a valuable insight. Sherry Schmidt, as you know, was on a few weeks ago, and we just talked about this. Understanding the 450 sale price that people are starting at right now because of a comp they saw. That 450 sale price was achieved because of a massive multiple offer
Yep.
and likely an uptick in what the actual sale price rationally would have been. Maybe it would have been 430 or four and a
Right.
quarter. So what is the real, like when you talk about value? And that's a much bigger question that only a seasoned realtor that's watched the historic trend and really can step back and look at the evolution of value and the appreciations as part of. So circling back to rates, I think we can both agree that the rates should not be the determining factor on whether you're buying or selling right now. It is not the issue at all.
Couldn't agree more. Yeah, yes, it makes a difference in your budget, and I
Mhm.
will fully acknowledge that. We'll talk about the pain in that, but
Mhm.
don't let that deter you from buying a house right now. I mean,
Absolutely
if
not.
if we run the math and it's not affordable, it's not affordable, right?
And then we
But
put a plan
don't
together to figure out what that looks like.
exactly correct.
Mhm.
So don't let it scare you out of the market, right? I mean, you've heard me say this before. My job's simple. It's all math. It either works or it doesn't. I mean,
Mhm.
it's
That's
yeah,
right.
some people the increase in rates has put them out of the market, but not everybody. So
Fear is a big word. I always
yeah,
say fun with math with Chad. Make it fun and take the fear out of it. Understand what it is you're trying to accomplish. What is your why? What is your affordability range? And then let's reverse engineer it from there and
yeah,
figure out and show you what life looks like getting out of a rental situation or right sizing to meet your personal needs is absolutely doable now. And if anything, we're going to see more value over the next 8 weeks in terms of acquisition. If you're a buyer or a seller right now, things are going to shift again in the spring. They always do,
yeah.
regardless of where the rate lock is.
Yeah, and that's, the one thing I think you and I can with 99.9% certainty say is prices are going to go up when the spring market hits. I mean,
Always.
we've been through this, 25 or 26 times now. It
Mhm.
happens every year.
Every
So,
year. It's just what it is
yeah,
in the market. All right. Always brilliant. So valuable. Chad Johnson, everybody. Chad is the premier lender with Edina Realty, based at our 50th in France office, available to you regardless of where you're coming in from. We've just finished a lender op in from the UK. We're dealing with relocation
yep.
nationally now. And then, of course, all of our local business. So Chad is a wonderful and reliable source that's been around for a very long time. Thank you so much, Chad. We really appreciate your time today.
Thanks, Cari Ann.